IPO stands for Initial Public Offering. It is the first sale of company shares to the public in the stock market. When a company decides to go public, they offer their shares to institutional investors, retail investors, and the general public for the first time. This allows the company to raise capital and expand its operations. Here are the detailed steps and processes involved in an IPO. 1. Selection of underwriters. The company selects one or more investment banks as underwriters for the IPO. These underwriters assist in determining the offering price, quantity of shares to be offered, and marketing the IPO to potential investors. 2. Due diligence. The company works with the underwriters to conduct a thorough review of the company's financials, legal structure, business operations, and potential risks. This helps in creating the necessary disclosures and prospectus for potential investors. 3. SEC registration. In the United States, the Securities and Exchange Commission (SEC) requires companies to register their IPO before going public. The registration includes detailed financial statements, business plans, and any potential risks associated with the company. 4. Pricing. The underwriters work with the company to determine the initial offering price of the shares. This price is based on various factors such as company valuation, demand for shares, industry trends, and market conditions. 5. Roadshow. Before the IPO, the underwriters organize a series of presentations known as the roadshow to attract potential investors. The company's management team presents the company's business model, growth prospects, financial performance, and any other relevant information to persuade investors to participate in the IPO. 6. Book building. During the roadshow, underwriters collect indications of interest from potential investors regarding the number of shares they want to buy and at what price. This helps in determining the final IPO price and allocation of shares to different investors. 7. Pricing and allotment. The underwriters finalize the IPO price based on the demand received during the book building process. They allocate shares to institutional and retail investors based on their criteria, such as potential return on investment or relationship with the company. 8. Listing and trading. After the IPO price is determined, the company's shares are listed on a stock exchange, such as the New York Stock Exchange or Nasdaq. The shares can be traded freely in the secondary market by investors. 9. Post-IPO. Once the IPO is completed, the company becomes a publicly traded company. It is required to comply with the regulatory and reporting requirements, such as filing quarterly and annual reports, and holding shareholder meetings. IPOs are significant financial events for companies as they provide access to a wide pool of capital and increase their visibility. However, they also involve significant costs and regulatory compliance. The success of an IPO depends on market conditions, investor sentiment, and the company's financial performance and growth prospects. If you liked this video, then hit the subscribe button and press the bell icon to know more about this.